Subscribe to my channel Report Stock.
Welcome to the Deep Dive, your shortcut to being well-informed. Today, we're diving into the recent Q3 earnings report for Applied Materials, AMAT. This covers the quarter that just wrapped up in July 2025. And our mission, well, it's pretty clear. Go beyond just the headline numbers. We want to pull out the really important nuggets, about what truly shapes a company's financial health. And we're drawing exclusively from the source material provided. Now, on the surface, those headlines for AMAT, they looked quite impressive. The company reported $7.3 billion in revenue, which is a healthy 7.7% increase compared to a year ago. Pretty good.
Yeah, solid growth there.
And their earnings per share, the EPS, hit $2.48.
Right.
That's a significant jump from $2.12 last year.
Definitely a noticeable increase.
What's more, these figures didn't just look good on their own. They actually surprised Wall Street estimates.
Oh, interesting. How so?
Well, revenue came in 1.42% above the Zacks consensus estimate. That was pegged at $7.2 billion.
Okay, so a decent beat on the top line.
Yeah, and the EPS showed an even bigger surprise, 5.98% over the $2.34 consensus.
Almost 6% beat on earnings. That's strong.
Pretty solid, right?
Absolutely. Those top-line numbers are certainly eye-catching, and, they tell a positive story at first glance. But, what's truly fascinating, and what every curious learner should really grasp, is that investors and analysts, they dig into the key internal metrics.
Right, beneath the surface.
Exactly. For a much clearer picture of a company's financial health. Think of it like looking past the glossy cover to actually read the book. These internal numbers, they directly influence that revenue and profit performance you just mentioned.
Okay.
And understanding them, that helps project a stock's future much more accurately.
Okay, so we have these strong headline beats, but here's something interesting I noticed. A bit of a puzzle, maybe. Despite these great Q3 numbers, shares of Applied Materials actually returned a negative 2.5% over the past month.
Oh, really? Down 2.5%.
Yeah. And meanwhile, the broader market, the Zacks S&P 500 composite, it saw a positive 3.5% change over that same time.
Okay, so the stock underperformed the market, even with the earnings beat.
Exactly. That tells us there's probably a deeper story here than just the headline earnings report.
Definitely suggests that. Market sentiment, future outlook, other factors come into play.
So let's unpack this then. To really understand what's going on, how did Applied Materials actually perform across its most closely watched segments?
Right, that's the critical question. This is where the real insights often lie. Let's start with the semiconductor systems segment. That's a massive engine for AMAT.
The big one.
Yeah. It reported net sales of $5.43 billion.
Okay.
Which comfortably surpassed the $5.39 billion average estimate from analysts.
So another beat there within the segments.
Yeah.
And
what's particularly robust here, really stands out, is its strong year-over-year growth.
How strong?
10.2%.
Wow, double digits.
Yeah, plus 10.2%. That kind of surge, it often suggests strong capital spending from their big customers, maybe foundries needing more gear for AI chips
or building out new fabs.
Exactly, a new phase of expansion, perhaps. It really bodes well for AMAT's core business in that advanced chip manufacturing equipment space.
Okay, so that's the powerhouse segment, clearly doing well. What about the Applied Global Services segment? Sounds like steady income.
It is, generally. That's their service and support side. This area brought in $1.6 billion in net sales.
And how did that compare to estimates?
Just slightly above the $1.56 billion estimated, so a small beat there, too.
Okay.
And it showed a steady 1.3% change compared to the year-ago quarter.
So not huge growth like the systems segment, but positive.
Right. It's not that massive growth driver, but it provides a stable recurring revenue base. And that's valuable for any company. It gives predictability.
Got it. Okay, and the net sales from display and adjacent markets, what's the story there?
This segment posted $263 million, and that also exceeded the estimate, which was around $250 million, $250.19 million to be exact.
Another beat. They seem to be hitting on most cylinders here.
You do. And this one had a solid 4.8% year-over-year increase.
Almost 5%.
Yeah, so it shows continued, healthy progress in those more diversified areas. It suggests they're finding pockets of growth beyond just their main semiconductor focus.
Okay, so far we've seen strength in the core, stability in services, decent growth in display. But hang on, here's where a number really jumps out, but in a different way.
Oh, which one?
The net sales for corporate and other?
Yes, the smaller segment.
Right. This segment reported only $12 million,
12 million.
which fell significantly below the $14.87 million estimated. So a miss there.
A noticeable miss.
But even more notably, it represents a substantial minus 47.8% change compared to the year-ago quarter.
Wow, minus 47.8.
Yeah, that's nearly a 50% drop year over year. What does that tell us?
It definitely stands out, doesn't it? Quite the contrast to the other segments. If we connect this decline, this big drop in corporate and other, to the bigger picture, well, it raises an important question. While the overall performance was strong, like we saw, what could possibly lead to such a significant year-over-year drop in a smaller, sort of non-core segment like this?
Right. What could it be?
Well, it could hint at something like maybe the divestiture of a non-strategic asset, something they sold off that was contributing revenue last year but isn't now.
That makes sense. Or maybe a one-off item.
Could be. Or perhaps a one-time charge hitting that line item. Or maybe a non-recurring revenue item from the prior year that simply didn't repeat. Without more detail in the report, it kind of remains a question mark. But it's exactly the kind of thing where a deeper analyst would start digging, looking for clues about internal restructuring or maybe discontinued operations.
Even if it doesn't massively impact the overall positive earnings story we saw at the start.
Exactly. It's about understanding all the moving parts.
Okay, so just to quickly summarize the internal picture then. Clear strength in their core semiconductor systems.
Definitely. The 10.2% growth is key.
Steady contributions from global services and display.
Stable and growing modestly.
And then this notable decline in that smaller non-core corporate and other segment.
Right, the near 50% drop.
This granular analysis, looking at each piece, it's exactly what you meant earlier about, looking beyond just the headlines.
Precisely. It gives you the full story of where the growth is actually coming from. And it also highlights areas, like that corporate segment, that might warrant a closer look, maybe raise some follow-up questions. It offers a far more complete picture than just relying on the top-line revenue and EPS, that's earnings per share, for those listening alone.
Right.
And speaking of the broader context, like that stock performance puzzle, it's probably worth noting that AMAT currently holds a Zacks rank #3.
Okay, what does that mean in practical terms for people?
Well, for those maybe unfamiliar, the Zacks consensus estimate we mentioned, that's basically an average of what analysts following the stock are predicting.
Okay.
Beating that consensus, which AMAT did quite nicely, often signals stronger than expected company performance.
Got it.
Now, the Zacks rank is different. A rank #3 is categorized as a hold.
Hold, so not buy, not sell.
Exactly. It's Zacks' signal that while the company's fundamentals look solid, and these results largely confirm that they don't necessarily see immediate strong catalysts for significant outperformance or underperformance against the broader market, at least not in the short term.
So kind of perform in line with the market.
That's the general expectation with a hold rating, yes.
Yeah.
It helps contextualize that recent stock underperformance you flagged earlier. The market might be saying good quarter, but maybe not good enough to justify a higher price right now, or perhaps looking ahead at other factors.
Interesting. So wrapping this up, what does this all mean for you, the curious learner who's trying to truly understand a company's financial story beyond just the press release?
Well, I think it really reinforces the core insight we started with. While beating those top-line estimates, revenue and EPS, is definitely good news.
You like to see that.
Of course. But a granular exploration, digging into those segment-specific net sales, that's what really reveals the true engines of growth.
Like the semiconductor system's impressive 10.2% increase here.
Exactly. And at the same time, it spotlights areas requiring maybe closer scrutiny or at least understanding.
Like that nearly 50% decline in corporate and other.
Right. So this detailed analysis provides a much more complete view than just the headline revenue and EPS numbers. It helps you really grasp a company's actual health and potentially its future trajectory.
That's a fantastic takeaway. And it kind of offers us a final provocative thought to consider, circling back to that initial puzzle about the stock price. Given that Applied Materials stock did underperform the broader market in the past month, despite its strong Q3 earnings and those key metric beats we discussed, what other factors, maybe qualitative things or bigger macroeconomic trends, might institutional investors be weighing when they decide their next move? Things beyond the solid numbers we've just unpacked here.
That's the million-dollar question, isn't it? Forward guidance, overall semiconductor cycle outlook, competitive pressures, geopolitical risks.
Right. It's like a student getting an A on a test, but maybe everyone expected an A+, or they're worried about the next test.
That's a good analogy. Even if the current results are good, Wall Street is always looking ahead. What's coming next quarter, next year?
Something for all of us to ponder. Well, thanks for joining us on this deep dive into Applied Materials Q3 report. We hope you gained some valuable insights today.
Subscribe to my channel Report Stock.